Hey, thank you everyone for joining me in today's video. I appreciate you. I want to talk about a brand new report from Redfin just posted on August 8th, which is today. So I hope you guys appreciate these timely updates. I'm going to talk about home prices, housing inventory, pending home sales, and also a lot of early indications of home buying demand, so we kind of gauge which direction we're headed here. So we basically right now have more or less, 1-year lows in mortgage rates. So let's have a look and see if this actually has increased home buying demand on a national level. Of course, real estate is local, right? So if you guys want to learn about what's happening in your neck of the woods, you have to look at closed home sales and pending home sales in your neighborhood. But in today's video, we're going to talk about more national trends, but also we're going to talk about the 50 biggest metros as well. In any case, looking at this report from Redfin, it says that rates dropped to the lowest level in over a year, prompting some house hunters or home buyers to ramp up touring. So it says a soft jobs report and recession jitters sent rates down last week. Rates decreased on Friday down by, I think it was like nearly 25 basis points in one single day. And also it fell by about 75 basis points or 0.75 percentage points compared to the year or the 1 month prior to that. Despite the small improvement in affordability, because rates have been coming down, pending sales, a measure of home buyers getting their offers accepted, pending sales posted their biggest year-over-year decline in 9 months. That's actually worse than last week, because last week they reported that pending home sales decreased in nearly a 9-month low. And right now we are at a 9-month low. But this rate drop prompted some prospective home buyers to start the house hunting process. So before we share, or I share, their take on that, let's just have a look at some early indications of home buying demand to see if some people are deciding to start their house hunting process, quote unquote. So according to the MBA, this was posted on Wednesday on August 7th. They post a weekly update regarding how many people are submitting loan applications to buy houses or to do a refinance. So this covers the week ended August 2nd. Applications overall, again, this includes refis plus purchase applications to buy houses, increased by 6.9% from 1 week earlier. This increase, though, is mainly due to the fact that refis surged this week. So for example, the refi index increased a whopping 16% compared to the previous week, and it was up by a staggering 59% compared to the same week 1 year ago. Now, I mean, this is a giant increase. I mean, I've been talking about double-digit decreases of refis for quite some time, especially last year. So one thing to kind of put this all in perspective, the amount of people who are submitting applications for refis is still at relatively very low levels. So we have a very low amount of people who are doing refis, but it did increase by double digits compared to the previous week. So that's refis. Let's have a look at their purchase index. Of course, a high index means that they're getting a lot of applications, or people are applying for applications for home loans. And of course, a decrease in their index means that there's a lack thereof, right? So their seasonally adjusted purchase index increased by 1% compared to 1 week ago, but was still down by 11% from the same time frame 12 months ago. So this increase of applications is really due to the fact that refis increased so much from the previous week and from 1 year ago. According to Joel Kahn, who's the MBA's Vice President and Deputy Chief Economist, he stated the following. Mortgage rates decreased across the board last week, and application volume reached its highest level since January this year. The 30-year fixed rate fell to 6.55%, reaching its lowest level since May of 2023, following dovish communication from the Fed and a weak jobs report, which added to increased concerns of an economy slowing more rapidly than expected. In regards to his quote here saying dovish communication, hawkish means that the Fed is basically saying, hey, we're not going to decrease rates. In fact, we're probably going to raise rates because the economy is, is hotter than expected. Inflation is out of control. That's what we saw to begin this year, right? Now we have dovish communication from the Fed, which is basically them saying that, hey, we're going to start seeing rate cuts here very, very soon, kind of laying the groundwork for a Fed rate cut next month, which is in September. That's being dovish, decreasing the federal funds rate. And I'll talk about this bad jobs report here in a little bit as well. As a result of lower rates, refi applications increased across all loan types, particularly for VA loans, and were almost 60% higher than it was at this time last year, and were at the highest level in 2 years. Despite this downward movement in rates, purchase activity only saw small gains, again, only increasing by 1% from 1 week earlier. So they saw an increase of conventional purchase applications offset by decreases in government purchase apps. So government purchase apps would be loans for FHA, VA, and USDA loans. All right, so based on this report, we're seeing a small gain up by 1% compared to 1 week ago regarding application levels. Now let's have a look at the number of people who are looking for houses for sale. These are home tours by real estate agents, showing houses for sale to their home buyers. This is according to showingtime.com. So the most recent stat that we have from then is the week ended August 7th. So this year, the amount of people who are looking at houses with their agents is up by 11.2% compared to the first week this year. Compare that to the same time frame last year. This time, we saw a gain of 8.2% compared to the first week last year. In 2022, it decreased by 4.1%. In stark contrast, back in 2021, this time, we were up by nearly 17%. So touring activity across North America has increased compared to the past couple of years. Now let's have a look at Google Trends. If you guys just look at Google Trends, you can just Google Trends. I don't know how to describe that. The website is trends.google.com/home. You can click on what's trending right now. These are what people are searching on Google right now. And this is for August 8th. Instead, what I actually go to is Explore. Go to Explore. You can type in basically any search term that people are looking for. Let's just look at homes for sale. You can change this to different countries. You can change this to worldwide. You can look at YouTube search, etc. I'm just looking at across the web over the past 12 months. This is basically an index which measures the amount of people who are searching for this, which is again, homes for sale. The index right now is at 82. Back at the same time frame last year, the index was at 100. This means that the amount of people searching for homes for sale over the previous 12 months was at a 12-month high at this time last year. And now, because the index is down to 82, it's basically an 18% decrease compared to 12 months ago. So going back to the MBA's report here, application volumes were down by 11%, and also people searching for homes for sale is down by approximately 18%. Going back to Redfin's report, it says rates dropped to the lowest levels since April of 2023. Earlier this week, as I reported to you guys, rates decreased to basically the lowest level we've seen in over 1 year, basically a 1.5 year low. That was when the daily average, according to the Mortgage News Daily, fell to 6.34% on August 5th, after a weaker than expected jobs report stoked recession fears. Rates have since increased to 6.58% as of August 7th, and that's near the lowest level in about 1 year. Falling rates are welcome news for homebuyers who have gained tens of thousands of dollars in purchasing power in the last month alone. So right now we're seeing a seasonal decrease in home prices. And on top of that, we're seeing rates decrease greatly as well, which is all contributing to making housing a little bit more affordable. And also buyers who are looking to buy houses right now, they have more purchasing power. In other words, they can qualify for a higher loan balance due to the fact that rates have been coming down. In regards to Redfin's quote here talking about this jobs report, let's take a look at that because that was posted on Friday. I didn't really touch on it too much on the channel. So I want to briefly talk about it in today's video. So this is the monthly jobs report regarding non-farm payrolls from the government. The actual number came in at 114,000 non-farm payrolls that were added. So jobs added only 114,000, well below the forecast of 176,000. Also, the previous reading, which was the previous month, there was 179,000 jobs that were gained. Now it's only 114,000. By my dumb analysis here, that's the fewest amount of jobs added since February of 2021. That caused rates to fall greatly on Friday. What also we saw was this as well. The US unemployment rate also increased as well. It rose more than expected as well. The actual reading came at 4.3%. The forecast was only 4.1%. So the actual reading was below the forecast and also higher than the previous reading as well. On top of that, at 4.3%, this is the highest rate we've seen since May of 2021. Looking at rates according to the Mortgage News Daily, on Thursday, we're at 6.62%. Then on Friday, after that horrible jobs report was posted, rates decreased to 6.40%. Looking at the economic calendar for today, which is again on Thursday, here is another jobs report that was announced. This is a weekly update regarding the amount of people who are applying for unemployment for the first time or are continuing to file claims. So we got kind of a mixed bag here. So continuing jobless claims came in at 1,875,000, slightly higher than forecast at 1.87 million. In contrast, though, initial jobless claims, these are people filing for unemployment for the first time, was only at 233,000, below the forecast at 241,000, also lower than the previous reading, which was last week at 250,000 people filing for unemployment for the first time. All right, let's get back to Redfin's report. Let's talk about home prices. So home prices are also falling from the peak, according to Redfin. The median sale price was $389,750 during the 4 weeks ended August 4th, more than $6,000 below early July's all-time record high. While that's a typical seasonal decrease, the year-over-year increase of only 3.2% is the smallest in about 9 months, indicating that price growth has eased slightly. Let's have a look at Redfin's data center regarding this, because prices have been coming down ever since really July this year, which is more or less seasonal. As you can see, back in 23, the peak in home prices was around June. Back in 2022, the peak was around May and June. Also, 21 was kind of an anomaly because we had near record lows in rates back in August. But it is actually absolutely normal to see home prices decrease in the last half of the year, as you can see in 23 and 2022. What's different though is that look at the peak right here. The peak was at a gain of 4% when the median sold price was at 396,000. Now we're basically going downward now. We're only a gain of 3% year over year. So in my opinion, this decrease in home prices is due to the fact that we have some seasonality in effect right now, because home prices tend to increase in the spring home buying season and not in the late summer months when people are on vacation or their kids are going back in school around this time. So we're seeing that, a seasonal decrease, but also we're seeing inventory higher compared to last year for quite some time as well, which is all contributing to the softness in home price growth overall. Also, a friendly reminder, real estate is local. Some areas like in the Northeast, for example, still have a relatively low level of the amount of houses for sale, especially compared to 2019, whereas other areas such as in Tennessee, or I should say Nashville, Tennessee, Austin, Texas, San Antonio, parts of Florida, for example, have more existing house for sale compared to pre-COVID levels. So we're seeing this, mixed bag, because areas that have a high amount of inventory compared to 2019, for example, are experiencing the biggest decreases in prices, whereas other areas such as in Hartford, Connecticut, where they have a lack of homes for sale, they're experiencing big gains in home prices overall. Now, speaking of that, let's have a look at the 50 most populous metros to see how they fared. So the biggest increase in the nation, at least for the 50 biggest cities, according to Redfin, for the 4 weeks ended August 4th, is Detroit, Michigan, giant increase of nearly 17%. After that is Anaheim, California, up by 11.4%, Providence, Rhode Island, New Brunswick, New Jersey, and Nassau County, New Jersey, up by 10.3%. In contrast, there's now 5 metros that are down compared to the previous year. Those metros are Austin, Texas, down by 3.3%, Dallas, down by 0.8%, Tampa, Florida, 0.5%, Nashville, Tennessee, like I mentioned, down by 0.3%, and San Antonio, Texas, down by 0.1%. By the way, I had a look at their weekly update that was posted 1 week ago from Redfin. Back then, which covered the 4 weeks ended July 28th, there was only 2 metros that were down from 12 months ago. That was Austin, Texas, down by 2.3%. Dallas down by 0.4%. So not only do we see more metros that are down compared to 12 months ago, but also these decreases are actually worse right now. Austin down by 3.3%, Dallas down by 0.8%. So check this out. This is something really interesting. So the biggest decreases in home prices are areas in which they have more inventory compared to 2019. So for example, Austin, Texas, according to ResiClub.com, by the way, they pulled data from Realtor.com, and the most recent trends they have from them is for the month of July. So in Austin, Texas, inventory is up by 39% compared to July of 2019. So a glut of inventory there. Dallas, Texas, let's have a look at Dallas. So Dallas, Texas is right here. Inventory, a small decrease down by 1.2%. So they have slightly less homes for sale compared to 2019. Let's take a look at Tampa, Florida though. Tampa, Florida saw a gain of 17% or 17.3% compared to 5 years ago. Now let's take a look at Nashville, Tennessee and San Antonio. So Nashville, Tennessee, they have 6% more homes for sale, and San Antonio is up by a whopping 25.8%. In contrast, looking at the metros that have experienced the biggest gains in prices, Detroit, Michigan, again up by 17%. And look at this right here. They have approximately 48.4% fewer existing houses for sale compared to 5 years ago. Also in Anaheim, California, which encompasses this area right here, they're down by 35.3%. Much different compared to the gains we're seeing in Austin, Texas, Tampa, and Nashville, for example. All right, changing gears slightly, let's talk about monthly housing payments, and also we're talking about inventory levels and pending sales as well. So their monthly mortgage payment is at $2,665 at the 6.73% rate. That's the weekly rate according to Freddie Mac. That's the lowest level since March, and also down by $169 per month compared to the all-time record high that was set back in April this year. So your average monthly housing payment is going down because we're seeing a decrease in home prices, but also we're seeing a decrease in rates as well. Now looking at pending sales, a measure of contracts being signed between buyers and sellers, that decreased by 6.7% year over year, the biggest yearly decrease in about 9 months. This is despite the fact that new listings rose by 5.9%. So we're seeing new supply increasing, but demand decreasing, down by nearly 7%. This is also quite astonishing as well, is that on a national level, we're seeing contracts being signed down by 7%, despite the fact that we have approximately 19% more homes for sale right now compared to 12 months ago. Additionally, the month supply right now is at 3.4 months, a small increase compared to the same time frame in 2023. Looking at Redfin's data center regarding this, let's look at new listings first. So new listings increased by 5.9% year over year, bigger than the 3.6% gain we saw last week. So it's gonna be interesting to see what happens here. If we kind of go like this, that's gonna cause inventory to pile up as well. But we did see an uptick at the same time frame last year though. So a gain of 5.9%. Meanwhile, pending sales are basically at least a 3-year low right now, and are down by 6.7%. Last week, we were down by only 5.4%. Now looking at inventory levels, which is right here, the amount of homes for sale has basically been flat ever since really June this year. We're up by 18.92%. Last week, we saw a gain of 20.13%. Also at the peak, which was basically in June, we were up by 22.14%. So active listings are basically moving flat over the past month or so. Having said that, we are at least a 3-year high though during the same time frame though. Looking at the 50 biggest cities across the US, the biggest increase of pending sales is actually in San Francisco. I mean, what a turnaround. Back in late 2022, that was one of the markets that was softening the most for these biggest cities in the United States. After that was Los Angeles, up by 4.4%. Then we have New York, New Jersey, Riverside, Providence, Rhode Island, and Sacramento, California, up by 0.4%. The biggest decreases of contracts being signed though, Houston, Texas, down by 30.5%. Again, this was a big decrease last week as well. I'm guessing due to the hurricane that hit that region last month. So I have to see if that increases in August. After Houston, Texas was Atlanta, Georgia, down by 17%. Detroit down by 15%. Interesting, right? So we're seeing contracts being signed down 15%, yet home prices up by nearly 17%. A friendly reminder, anything that has to do with a closed home sale, such as the median sold price, is definitely a lag indicator what the housing market was like approximately 1 and 2 months ago when the home buyer got their offer accepted. But looking at a lead indication of home buying demand, that's pending sales, that's the third worst in the country right now, Detroit, Michigan. After that was Minneapolis, Minnesota, down by 14.4, and West Palm Beach, Florida, down by 14.3. And looking at the amount of new listings hitting the market, San Jose, California led the nation once again, up by nearly 22%. Then we have New Brunswick, New Jersey, 18.7, Montgomery County, Pennsylvania, 18.4, Baltimore, Maryland, up by 18.1, and San Diego, up by nearly 18%. In contrast, new listings decreased in 8 metros. The biggest decline, Atlanta, Georgia, down by 16.4. Then we have Houston, Austin, Texas, Detroit, and Warren, Michigan. Now looking at the month supply at 3.4 months, this is actually pretty interesting because we saw a big decrease compared to the previous week. 1 week ago, the month supply was around 3.7 months. Now it's at 3.4 months. So it is an improvement going down here, but it's at least a 3-year high going back to 2021. In regards to how fast or how slow houses are selling on average, it's taking about 34 days to sell a house. This is when you get your house listed for sale until you accept an offer from home buyer. It's 34 days on average. This is higher than last year. At this time last year, days in the market was at 28 days. Now we're at 34 days, at least a 3-year high during the same time frame. Let's take a look at this as well. This is the amount of houses that sold above the seller's final list price. Over the previous 4 weeks, that ratio was only at 30%. So basically 1/3 of all houses that sold above the seller's list price. But of course, in contrast, this means that 70% sold at or below the seller's final list price. Something that caught my attention is that 30% right now, this is at least a 3-year low. But on top of that, the peak during the same time frame was back in 2021. Back then, 50% were selling for over the seller's asking price. Now we're well below that at 30.2%. Meanwhile, the share of price reductions is absolutely skyrocketing right now. We're at 7.2%. That is a new all-time record high. But keep in mind, their data only goes back to 2015. I would imagine that's this figure, if they did have data going back to 2008, would see price reductions at much higher levels than we're seeing today. But it is noteworthy, though, that we have the high share of price drops right now since at least 2015. Also, this surpasses the peak back in November of 2022. Back then, the share of price drops was around 6.7%. Now we're at 7.2%, at least a 3-year high during the same time frame. Also, houses on average are selling below the seller's asking price. That ratio is at 99.4%, which basically means of all the houses that sold over the previous 4 weeks, they sold for 0.6 percentage points less than the seller's final list price. This has been a common scenario that we've been seeing ever since May. Before that, houses were selling at a higher rate or higher number compared to 2023. But right now, we're at least a 3-year low as well. Back in 21, the peak, houses on average were selling about 1.5 percentage points over the seller's final list price. Now they're selling slightly below that at 99.4%. Lastly, looking at Redfin's Home Buyer Demand Index, which is of course a future indication of closed home sales, at least from their agents, is at least a 3-year low right now and down by 13% year over year. With that said, please like and subscribe. Hope you guys have an amazing day. I appreciate you guys so much, and we'll see you on the next video. Thank you.